Hey, we have an awesome mix here of friends and family and friends that we call family. Some of you know I listen to a lot of reggae music. There's a group named Soja that they have a song that says, if I could spend the rest of my life with my people, I would do it over and over again, and I would do it with you guys. This is my group here. And so before we get started, I have an attorney. I have a real estate attorney. I'm not one, but we have one in the room. And my real estate attorney makes me read you guys a disclaimer before any presentation. It basically states that I'm not an attorney, I'm not an accountant, and any investing advice that you hear during this presentation, consult with your accountant, your attorney, your rabbi, your sheikh, whatever what have you. So why are you guys here? So we've invited you here to listen to the story of how we founded our company, 1015 Capital, and why we're so excited about this company, and why we think you guys should be excited as well. And we're grateful that you guys are here on a Friday afternoon. So why am I here? So my family immigrated here from Puerto Rico back I was still in elementary school. And we moved to Central Florida. And I was in that lower middle class area where everybody has a little bit of a struggle. Everybody has a story. And what's cool about that community is it's tight knit. Everybody knows each other. The neighbors know your business. You know the neighbor's business. And so we also grew up with a very tight family union. And so in our community, they always urge you to, to better yourself, you have to get out of the community. And in order to do that, you go to school. So any UCF grads in here? Come on. Yeah, charge on nights. There's a bunch here. Ah. And so I went to UCF and got my electrical engineering degree. And started working at an electrical contracting firm, building roller coasters. So, I think what I do is really cool. So I build, every project is a new project. So has anybody ridden their Avatar ride? No? One, yes. So my claim to fame is I'm actually featured on that thing. So like when you're going through the queue line, there's a scene when you're in a lab and there's like an avatar laying in the water or horizontally or whatever, and there's a monitor on top and it's going through the different pictures, seeing if you're a match. If you're a good scientist, then they match you and you can be an avatar, and I actually match. You'll see me up there and I'm a match. So that's cool. Yeah, you've seen me, see? Yeah. And so so education was big in our family, and we were led by our matriarch, which was our grandmother. She held everybody accountable. She held all the kids accountable, all the grandkids accountable, and she pushed us to do, to better ourselves through education. And so, she would get on your ass if you slipped on studying, if you didn't even bother to apply for school or college or something. And she'd be flying up here from Puerto Rico to make sure that we did that. And so, she was the glue that kept our family together. And so, she also had a bunch of real estate. She lived off of the income from 5 or 6 properties that they had. And so growing up, real estate was always around us. And so we just thought it was normal. Everybody had real estate, right? Everybody's grandparents owned real estate because it was just normal, in our eyes. And so that's where kind of the real estate juices, we were aware of it. And so fun fact, this is my sister here. Fun fact, I don't know if she knows this, but my grandfather was a block mason. That was his trade. And he actually traded on one of his properties that he purchased in an area called Coupe. He traded his manual labor for the down payment on the house. So that was pretty cool. That was back like in the 60s or 70s. And so anybody read the book Rich Dad Poor Dad? Yeah, and so I had the fortune of growing up with Rich Dad and Poor Dad. So for me, Rich Dad was my uncle, whom I was named after, Duamel. And so he was always holding you accountable as well. So he was like my grandmother's proxy. And so he would be calling to make sure that did you call your cousins or did you call your grandmother, or are you guys playing well? And so holding you accountable for your school, holding you accountable for your extracurricular activities, making sure that you're staying true to any commitments that you have made to yourself or to anybody or to him. And so, so he has currently about 10 properties that he lives off of the income. And so, naturally, he's pushing you first. You get your degree, and then you can worry about real estate. So I got my degree. I said, okay, Uncle, what's next? I'm ready, man. How do I amass this portfolio like you and live off the rentals? So he says, all right, I got a secret. You gotta listen carefully. I got the secret. Savings. I'm like, savings? So yeah, you work for 5 years and you live very frugal. And then you get the down payment, 20% down payment for a property, and you get a property. Then you do it again. So I'm thinking, man, so after 10 years, I've got 2 properties. I'm not living like a normal life. I'm living frugally. So like, man, there's got to be a different way to do this. And so, but I appreciated the advice. And so I met Lupita on 1015 in 2005. So hence the company name, 1015. And so what was really cool about how we connected was that we're both really passionate about real estate, even way back then. So we would share ideas and thoughts on how to acquire properties or just how to get into the real estate game. And so we started going to seminars, we started reading books, and started getting educated because, like, man, we gotta shortcut the system. We gotta figure out how do I get more properties quickly. I don't want to wait 5 years and live frugally. There's got to be a shortcut. So we started, doing a lot of research, going to a lot of seminars. I even went to, Trump University. But full disclosure, we learned a lot from there, and from that seminars that launched our flipping career. And so we flipped houses somewhere between 15 and 20 houses that we flipped through the last, 9 or 10 years. And so we took a break in 2014. Mostly because, like, man, like anybody here flip houses? Yeah, so it's hard work, right? And so we're there at 7 in the morning and, waiting on the contractor. Sometimes I'm late to work because the guy didn't show up. And then, at lunchtime, I'm calling to make sure that they're there. Or maybe I'm doing a material run in the middle of the lunch hour, and then after work, I can't go straight home. I have to, like, maybe go to Home Depot or Lowe's and so it's work. It's a lot of work, man. So like the reward is nice, right? Because when you sell, then you get your capital back. But it's like, man, this is hard, especially with full time, and Lupita's got a full time. So yeah, and so like, man, there's got to be a better way. So we took a break to assess our business plan. What are we doing, and what could we do better? So. 2015, we moved into this community. We love Vista Lakes. We bought our dream home. We call our dream home. And so flipping houses afforded us the luxury to be able to, completely gut our house and redo our house. And we love where we live. We love our community. And so in 2016, we had Luna. And so, life changes a little bit. And so I started focusing on my engineering career. So I did, I got my professional engineering license. It's about a 2.5 year process. And so there's a lot of exams and classes. And I mean, it's a pain in the butt. And so I focused on that and got that done in 2018. And by the way, we're pregnant now with Soden, who was born on Christmas Eve of 2018. So 2018, I decided that, after around April or so, or in May, I got my engineering degree. And I thought, okay, so now I can refocus, like something clicked. All right, so now I can focus on real estate again because it's in our blood. We want to do it. But there's got to be a hack, right? And so we thought, okay, multifamily, it's duplexes and triplexes. That's multifamily. Because apartment communities, that's the rich man's game, right? That's for the wealthy. That's not for me. So I'm going to do duplexes and triplexes. So I started reading books. I started listening to the podcast, watching the YouTube videos, and then the more I learned, the more I realized, anybody can own a 16-unit building or a 20-unit building, and if you're part of a team, you could buy a much larger unit, a much larger asset. And so around November or so, I finished this book by David Lindahl, Multifamily Millions. It's an awesome book, but that basically set the foundation for me, amongst other books that we read. But as an engineer, as a student, I treated this as a post-grad degree. I went all in. And so November, we were very pregnant, or Lupita was very pregnant. Dude, last time I said that, I got chastised. So, but Lupita was very pregnant, and I was like, I'm ready. I want to jump into this multifamily world, right? I want to buy apartment complexes, but I need to find some like-minded individuals. I need to share ideas and network and get to know how other people are doing it. And so, does anybody believe in the law of attraction? Yeah. And so, so it's November 2018, and so we decided, all right, let's find a seminar. Willing to travel anywhere in the United States, wherever a seminar is or a meetup is, I'll go to it. So lo and behold, the only one available first week of January was in Tampa. So I was like, it's only a 2-hour drive. So I was like, okay, that's awesome. It's right there. And so so I went to it, and it was this gentleman. It's a little bit hard to see here, but this gentleman here. I mean, I'm 6 foot tall, so imagine how tall they are, right? So. They're giants, man. So I go to the seminar, right? It's to learn how to invest in apartment complexes. And 5 minutes into it, he goes, okay, so cap rate is the NOI over PV. Okay, real quick, everybody stand up. So we stand up. He goes, all right, turn to your right and introduce yourself. Okay, it's kind of weird, but all right. Duamel from Orlando, what's up? And then, all right, sit back down. He goes, all right, so the NOI is net operating income. PV is property value. Okay, hang on. Before we continue, everybody stand up again. So we stood up and turn to your left and tell that person your 5-year goal. So now, that's kind of weird, right? So I'm going to tell this complete stranger my 5-year goal. And so I'm like, all right, it's weird, but why not? I'm here. So on and on the weekend went. And so my goal of going to a seminar, meeting like-minded people, and networking and getting to know them, I mean, this guy was forcing me to meet my goal. And so, you guys seen the Grinch? His heart grew 3 times at the end. So I felt like my brain grew 3 times the size during this event, because I met some awesome people. I met people that I call my mentors now. Some people that own 15,000 units. I met people that haven't done any deals and we're looking to get started. So it was a gamut of, wider array of people. And so it was cool to just get to know. And since January, I've been keeping in touch with the majority of the people that I've met, including this gentleman, this beautiful Danish man here. His name is Jens Nielsen, and he's become my coach. So when we were networking and we met, we talked about our goals, and he says, man, you fit the mold in what I'm looking for in a student. Would you allow me to mentor you? So I'm like, cool, yeah, why not, man? I'm here, I'm drinking the Kool-Aid. So it was cool. And so I've been under his tutelage since January, and so it's opened my eyes immensely. And does anybody believe in the law of attraction? I mean, right? So going back a little bit to October 2018 or September, I'm watching a YouTube video, and so I see this gentleman here. He was charismatic. He had a compelling story, and he owned. He's done 27 deals, $200 million transactions in apartment communities, and he's telling you how anybody can do it. I'll teach you if you text this number. So I texted that number, but nothing happens. January, February comes. Completely forgot that it happened, right? So he calls me out of nowhere in February. Like, I get this 925 phone call, and I'm thinking, everybody gets these spam calls, right? It's like, it's going out of control lately. So I'm like, screw it. I'll pick up, see who it is. And it's like, hey, this is Vinny. His name is Vinny Chopra, no relation to Deepak. And so, hey, this is Vinny. I'd like to get to know you. So I'm like, okay, that's cool. And so he asked me for my goals. Hey, what are your goals? So I'm like, this another person that wants to know my goals. So we talk, and he goes, man, you know what? You fit the mold of what I look for in a student. Will you allow me to mentor you? And I'm like, I've heard this before. I'm good. I've got one. I'm good. Thank you. And he said, man, just think about it, because opportunities like these don't just appear. So I said, all right, what do I have to lose, right? So I did it. And so has anybody ever been part of a mastermind group? I know Jose. And so a lot of these you have, you're on a Skype call or some sort of a video call, and there's like 15 or 20 other people around, and you know, you got the main guy in the middle, and you know, you see everybody's face, everybody sees your face. So don't pick your nose, Jose, I did that, is mistake, mistake. I'm just sitting there, but so I went to the first one, right? And so, you know, I'm sitting through it, and he's like giving this motivational speech, hey, you know, go out and do this. And so an hour goes by, and I'm thinking, man, that was a waste of my time. That was boring. Like, I got nothing out of this. So I'm like, man, what did I get myself into? And then somehow during the weekend, I'm like, you know what, screw it. You know, ever since that seminar, I've been out there networking with brokers, with investors like yourselves, with people that are closing deals. So I'm very active. I'm putting offers down on. I mean, Lupita and I, we went to Popcar to look at a 20-unit deal that we were close to getting. And I think we consulted with Mikey on it. And so, you know, we were ready to, you know, to move on something. And so I'm like, it was right in the middle of, again, law of attraction, it was right in the middle of this coaching. So then on the next call, I presented that deal and another one that I had been working on. And so, you know, so I basically hijacked the mastermind classes. And so like every week since then has been like, it's just me and this guy. And just going through deals, right? Just going over my analysis, and he's coaching me on how to put offers in. We put a bunch of offers in, and how to raise capital on deals, and you know, just the theory of how to get deals done. And so I think I was kind of standing out as a student, right? And so so then, out of nowhere, sometime in April, you know, we're chilling at the pool, you know, we're grilling. I'm making myself a drink, and I get this text. And it was a mass text, but it said, this is Vinny. I lost my deal in Atlanta, and I'm looking for a deal. I have $8 million to spend, and hungry investors, I need a deal fast. So I'm like, holy crap, I got $8 million in my hand. How do I take advantage of this? So by all the networking that I had been doing, all the work I had been putting in, all the late nights, and you know, just going out, missing work to go meet with people, I had 2 deals available that I could present to Vinny, and both needed about $4 million raised. So just perfect candidates. So within the hour, I had 2 conference calls set up, and unfortunately, Vinny didn't take the deals because he was looking for something that he can completely control from top to bottom. So, but that's cool because I think that I stood out again, right? And so later on that week, he tells me, or he asked me, hey, is Maitland near your house? And I said, yeah, it's about 30 minutes away. Why, what's up? He goes, oh, we're flying down on Friday to go look at a property, and I'm bringing my whole team, and I think this is the deal that we're gonna do. So I'm like, all right, so how can I be of service? How can I be of value? He said, no, it's not open for students. I'm just giving you a heads up. I'm like, dude, I'll pick you up from the airport. I'll carry your bags. I'll bring you coffee, you know? Like, my wife and I are foodies. I'll take you to the best food joints if you just let me show up. And he said, no, appreciate it, but this is not open for students. So I'm like, man, I'll be invisible. I'll just be a fly on the wall. And he said, all right, if you're there at 7 a.m. on Friday, I'll let you walk with us. So I show up on Friday, and we're walking. I was supposed to be invisible, but every time he looks this way, I'm looking this way and asking him, what are you looking at? And then he's looking over here, and I'm like, what are you looking at? There was a point where he was like straightening up his pants, and I'm straightening up my pants. I'm like, I just took advantage of the access that I had. And so a couple weeks go by, and he says, hey, we landed the deal. We're going to go do the due diligence on the deal. I'm like, okay, what's due diligence? So we're going to verify the expenses and the income and make sure that everything matches out. So I'm like, cool. So how can I be of service? How can I be of value? He says, no, this isn't open for students. I'm like, dude, I'll pick you up from the airport. I'll carry your bags. I'll bring you coffee. And so he says, no, I appreciate it, man, but it's not open for students. I'm like, man, I'll be invisible. I'll be a fly. I just want to be a fly on the wall. He's like, all right, if you're there at 7 a.m., I'll let you in. So I was there at 7 a.m. and did the due diligence with them. And so, man, it's not very glamorous. I mean, I'm sitting there just looking at leases, 300 leases, you know, looking at 300 apartments. We're hitting light switches. You know, does the lights turn on, or does it need flooring? Does it need paint? And so, which, by the way, I think I was true to being invisible because there was a moment where we sat in a round table, and I just pulled up a chair and sat down in a random chair. And then Vinny sat on one side and the broker sat on the other side, and they just started negotiating right there. They just, Vinny started trying to figure out where the number should be and how to lower the price, and the other guy was trying to, it was just really cool access. And so after the due diligence process, I asked Vinny, so what's next? And he says, well, now we got to raise capital. And so he did take me up. I did take him to one of our favorite food joints in the Mills 50 district. It's awesome. And so I'm not going to name it because they didn't sponsor me, but it's awesome. And so we're there having drinks, having kind of a celebratory dinner. And he says, I'll teach you how to raise capital. And he shook my hand. I'm like, all right, let's do it. And so I had the opportunity to raise capital on this deal. And I also invested my own capital on this deal. And we closed on June 27th. So now I am an owner of 324 unit apartment complex here in Orlando, in Maitland. Yeah. So there's a statistic, right, that jumped out at me recently. It was on Forbes, and it said that minority households are going to have negative net worth by 2050. And so, being from that community, that's kind of alarming. And I'm thinking 2050, that's my kids, that's my lifetime, hopefully, and my kids and their kids. So what kind of legacy are we leaving them? And so made me get a little bit more passionate and to want to teach others how to invest in deals like these, and hopefully, by taking action, we could curb this statistic. And so the SEC is the government agency that protects consumers. They say you can only have two types of investors: an accredited investor, which is $1 million net worth, 200,000 salary, or a sophisticated investor, which is somebody that maybe has a 401k, maybe dabbled in stocks a little bit, but understands the risks of investment, maybe thought about getting into real estate, did a little bit of research. And so that opens the door for a lot of us. And so has anybody in here wanted to invest in real estate and just didn't know how? Or wanted to get into the commercial and didn't know with who? So what we've learned is that these large apartment complex deals, you get pools of investors to come together and raise capital and maybe invest their own capital into a deal, and you're buying a share. Similar to in a stock, you're buying a share of a company, you're buying a share into this apartment community. And so that is the way in to these apartment communities. So why multifamily? So to capitalize on net spendable cash flow, what that means is that every month or quarterly, you're getting a distribution, a direct deposit from your percentage of the income that's coming in. So tax advantages. So again, I'm not an accountant, but there's recent tax laws that went into effect that are awesome. It's not a secret that our president now is a real estate investor. So some of these tax laws will benefit real estate. And so some of these are, we'll get into it later, but like depreciation, they accelerated it and front loaded it. And so the cash flow you're getting monthly could be completely offset by the depreciation. So that means that all the cash that you're getting monthly, could be $300, $400, $500, $1,000, is completely tax-free. Again, consult with your accountant, but those are the awesome tax benefits. Hedging against inflation. So as inflation happens, we're able to raise rents and stay ahead of it. So profit through appreciation. So as you're raising rents in commercial properties, so residential properties, you're bound by your neighbors, right? So what their house is worth. In commercial, it's all about the income. So if you can increase the income of a property and lower the expenses, you've created that appreciation. And leveraging your money, let your money make money for you while you sleep. So anybody own single family homes as investments? So we're watching Game of Thrones one night, the finale. So right, and so it was probably April or May, but we were watching Game of Thrones. It was like 10 o'clock at night, 11 o'clock at night. We get a phone call. Lupita gets a phone call. It's from one of our tenants, and he's freaking out. Like, how do I turn off the water? I'm like, what water? Where's the water main? Like, for what water main? Like, It's a valve, you turn it off. He goes, but where is it? It's like, I don't know. It's like, well, I don't know either. Like, well, which house is this? I don't even know. I mean, we're freaking out. It's middle of the night, and so we had to, I mean, it was a long night. So, that sound familiar? And so also recently, very recently, we have a property that vacated at the end of July. And so, the renters, and so we're bringing future renters to come look at it. So Lupita comes and takes them sometime in mid-July to look at them, to look at the house, and and so when she gets to the house, I mean, I don't know if you can make it out, but this is what she found. I'm just kidding. That's like, no, it's bad, but it wasn't that bad. But they dipped. They left and went to Texas. And so when we thought it was just going to be an easy change out, turned out to be, well, now we're losing a month, maybe 2 months of income, because now we have to wait till we get these things repaired and cleaned up and painted and all that. And so those that have single family homes know that a month, 2 months, 3 months could be your whole profit for the year. And also, you guys remember 2008, the Great Recession? And so, fun fact, Vista Lakes, 2005. So we bought our house in 2015 for the same value that it was at in 2005. So I mean, think about what the Great Recession did. So I mean, the market went great, then it crashed, and it drug all the way to recovery. And we just made it now to 15 years ago prices. So it's phenomenal. So historical stability. So why apartment communities? So for the last 4 decades, for the last 40 years, vacancy rates have pretty much plateaued, and also for the last 25 years, apartment community investing has outperformed any other form of commercial investment. So the average annual return has been about 10%, and stocks 5 to 7% the same time period. There's an increasing demand in apartments. So millennials, some are in here, don't want to purchase. So statistically speaking, according to the U.S. Census, from ages 25 to 29, only 31% of millennials own homes. Ages 30 to 34, only 45%. And so the baby boomers, so everybody in this room is too young to be baby boomers, but we know some baby boomers, right? Yeah. I was trying to give you a little. So, but the baby boomers are downsizing, right? They're moving into, they're probably looking for more amenities. They're retiring. They're getting into yoga, or they're doing other things. So they're looking for a more social lifestyle. So they're moving also to apartment complexes. And so something that's interesting is this chart shows you the straight line is home ownership in the last 10 years. This is the U.S. Census. And the red is renters. And so we spoke about how millennials are bumping up the rental demand. And so this chart goes out to 2020 U.S. Census projection on that age group popping out. You see it's increasing. And also a demographic shift, so migration and immigration. Some of us came from other places, maybe other countries, and you know that when you get to a new place, then you can't immediately buy a property because you have to qualify for the mortgage. In order to qualify for the mortgage, it may take a year, 2 years, 3 years to get some job history. And so that's also driving the rental demand. So short-term leases. So we're able to keep up with market rent and inflation by having 9 to 12-month leases. And so some of you that have lived, some of us that lived in apartment complexes know that it sucks every time you go to renew a lease, it's up $50 or it's up $100, and so this is why. And it's a preferred finance market. So something that we discovered is that the banks love apartment complexes. Think about this. We had a $52 million deal in Maitland, and $39 million of it was a mortgage at 3.8%. That's less than in my house. It's nuts. So I'm not an accountant. But depreciation, we talked about depreciation. So basically, depreciation is you take the value of the property and divide it by 27 years, and that's how much that's the maximum you're allowed to depreciate every year. So they count against your income. So what the new tax laws did recently is they chopped it all up, and they did what's called cost segregation and accelerated depreciation, fancy terms for chopping it up and moving it to the front. So now there's all kinds of cool ways that you can front load it and depreciate more up front. Capital gains. So you have the opportunity to, when we sell a property, instead of paying the capital gains taxes, you can defer that and just move it into the next property and into the next property. And self-directed IRAs can be invested. Self-directed 401ks can be invested. So it opens the door for a lot of people. And so, who is 1015? So everything is a teamwork, right? So I have a sports background, and so I'm huge on team. I believe it takes a team to be successful at anything. And so 1015 Capital isn't just me. I look pretty good in that picture, but my wife Lupita is there. So she's been in real estate since 2006 as a professional, and she's a real estate broker licensed in the state of Florida. She specializes with investors. She's got over 40 properties that she manages, and so investment it's always been her thing. And so what she does with 1015 Capital is, let's face it, she's much prettier than I am, and she's much easier to talk to. Sometimes I cuss a lot, and so she doesn't, only at me. But so she's in charge of. She's who you guys would talk to on a daily basis regarding an investment or a property, because all the books are wide open whenever you invest on a deal like this. So we'll gladly show you the income, the expenses, what the business plan, how things are moving. So I also have some other players on our team. So Myron McNeil, a friend of mine from UCF, has an electrical engineering degree from UCF and an MBA. And he's a numbers guy. He's a numbers cruncher. So those that know me, I'm a little bit more social. Just a little bit more friendly, especially after a few drinks. And so he is more of the introvert, just a numbers guy. And so, which is cool because we complement each other. And so he's taking that on for our team, is analyzing deals and number crunching. We mentioned Vinny Chopra earlier. With the Bentley deal, with the Maitland deal, he's done 27 syndications, over $250 million of transactions, and a friend of mine. Sapin has become Vinny's right-hand man, and so Sapin in his own right has 4 or 5 of these apartment deals in Florida. He owns a few in Orlando and a few in Jacksonville, and also a guy that I call a friend. I actually was just texting with them today on we had an offer on a deal in Waterford Lakes, and we were notified that we didn't get it. But so yeah, these are guys that are part of my team. And we mentioned Jens Nielsen earlier, the Danish fella. And so what I didn't say was the whole time that I was pursuing the Vinny deal and I was doing all that work, he was my customato. You guys remember Mike Tyson? He was my customato, like in the background. All right, you need to do this. Take advantage of that. Ask him this, ask him that. Ask and get out there. He was coaching me the whole time. And he's the guy who's, we've pivoted our business model to get more deal flow, and so he's been instrumental on that. Also, have you guys, anybody here seen the movie The Secret, read the book, or Chicken Soup for the Soul? So Jack Canfield, we actually have a little book club going as well. We read some Jack Canfield stuff together and analyze it. So it's more than just the numbers and the nuts and bolts. So what we do. So what we do in a nutshell. This is the nuts and bolts. This is the meat. This is what you guys came for. And so there's a 7-step approach to how we acquire these properties. So first is we determine an emerging market. So what is an emerging market? We look for job growth. We look for population growth. So what kind of jobs and what kind of population growth? And also, does the city support, does the city planning support the growth? How many here love I-4 Ultimate? Right? So But that's because we are an emerging market, and our city planners are planning ahead. They know that, you know, these guys are coming. We're getting a lot of tech jobs. So they're planning ahead, and so they're building this infrastructure to be able to support that. So this is an example of an emerging market. So how do we determine this? There's a lot of smart guys behind this. They look at all this market research, job reports, population reports. So this is a cycle that shows basically how every market is. And so you have your magenta that kind of, you know, you're in a downswing, and then the blues rock bottom, and you start your upswing into your green. You start recovering into the burgundy there. And so this is the sweet spot for investments. But anywhere here, you can ride the wave, and it's you know, that's where you want to be. And so Orlando right now, believe it or not, it's in the green dot. So we still got a ways to go. And so how do we know that? So again, all these job markets, all the reports and all that. This pie chart, a little bit hard to read here, but we promise to have better monitors next time. But basically, you have your recovery, your expansion, your hyper supply, and your recession. And so Orlando right now is in recovery. And Tampa, Phoenix, Jacksonville are in the expansion phases. So it's a really cool time. So the second thing we do is we locate a value add property. So what is a value add property? That is an asset, and asset is an apartment complex, but it's an asset that there's opportunity to raise rents, and you raise rents, you raise income. So we look for things like bad management. Is it a mom and pop shop that maybe they don't want to rock the boat, so they haven't raised the rents, or maybe they have some maintenance or repairs that they're just putting off. So we target these properties. Just quick side note: this is a spreadsheet. It's fun, and it just shows the level of analytics that we go through when we analyze a property. So just about every cell gets touched. This is actually one we use for the Maitland deal. This is one that I put together. I put the numbers on that deal, and you see all the tabs that that have to be touched. So there's a lot of effort that goes into getting these deals, into looking at them. So when we're looking for properties, we're looking for asset classes. So basically, in a nutshell, you have A classes are your downtown with all the amenities, and it's got all the cool gadgets, and they're the expensive ones or the trendy ones. And then D's are the ones that you probably won't even go collect rent in person. We stay away from both, and we go for B and C. B and C class assets are anywhere from between 20 and 40 years old, and so good for white collar, blue collar workers, workforce housing, and always in demand. So the third thing that we do is full property inspections. And so this is an actual picture of the deal in Maitland. And I don't know why, but see the window right here that has no lights and has the shade, that's where I was holed up looking at expense reports and all that stuff. So this is while we were there doing the actual work. So the fourth step we do is negotiate the contract. So now we're negotiating the deal. Did we find something that maybe drives the price down, or the broker wants to drive the price up? And so we're negotiating, and we're also getting the terms of the mortgage. Something that's another proof of how banks love apartment communities. Interest-free for 5 years. I mean, and our term for this project is 5 years. We think we could sell it in 5. That means when we sell, there's a potential we would not have paid a dime in interest, which is pretty powerful, because it gives you cushion on your numbers. So the fifth step that we do is we manage the asset. So we don't actually property manage. We hire a qualified property manager and manage them. And so we make sure that they're doing our business plan. We make sure that the repairs are being done in a timely fashion. We're holding them accountable. And we visit the property and do all the tax preparations. So the sixth step is we liquidate and we sell. So now we time the market right, because our target's 5 years, but the market may say, hey, you can sell by year 3. You have made all your numbers. Or, hey, man, it's not a good time. Maybe wait a couple more years. So we get good terms, like we have about 10-year plans on these typical deals. So you can wait 6, 7, 8 years and then time it and sell it. And so the last step is reinvest. So now we've sold, you've got your investment back, and you have a profit. So you have an opportunity to either pay capital gains tax or defer it. What's cool about the 1031 exchange is that you get your profit, and then you can put that on the next property. And then you get profit from that and move it to the next property and to the next property. Then you pass away, you grow old, you hit your 150 years old, and then you leave it to your kids and your heirs. And now they have that, they inherited it. Now they're getting the benefits of being able to invest in these deals. And then you pass it on, they pass it on to their kids, and then they pass it on to their kids. I mean, ladies and gentlemen, this is how you build generational wealth. I mean, this was information that was reserved for the privileged, right? For centuries. And it's not that it was a secret, it's just we didn't know that this existed. And so it's awesome, it's powerful, and I'm sharing it with you guys. And so, quick case study on the Bentley deal. So that was a 7-step approach, and so this is an actual packet that we put together on these deals to go through them with you guys, to go over the numbers. And so there's a lot of cool numbers like cap rates and property class, and so you see the $51.8 million purchase price, $39 million principal balance. Kind of hard to see, but there's a number here called investor equity multiple, and it says 1.8, and that's conservative, but that basically means that whatever your investment is, multiplied by 1.8, and that's your return that we're projecting on this deal. And again, it's always conservative because you don't want to overpromise and underdeliver. We find, what's the sweet spot is, and then just go a little bit below it, so you guys have a pleasant surprise. So it's a lot of fancy, a lot of cool numbers. We'll review the different unit mix. So does it have 1 bedrooms, 2 bedrooms, 3 bedrooms? And what is the current rent and what is the market rent? So you can see what we're projecting to gain from the deals. Pictures of any of the repairs that need to be done. So at Bentley, we were going to replace the appliances and maybe put some backsplash floors. We're going to put the vinyl wood floors. And pictures of the amenities. So this one happened, it was 1984, so 30 years old, but it had a lot of cool amenities. I mean, it's got an awesome pool, a business center, a hammock garden. I mean, I laid in that hammock, it's pretty comfortable. They had a CrossFit. I mean, they had that tire that you throw. They had a whole CrossFit section, a yoga studio. So this particular deal was really cool. So how to partner with us, right? So we're inviting you to partner with us on these deals. And so as an equity partner, so we do all the work. As an equity partner, you guys benefit from the cash flow. So we talked about monthly distributions or quarterly distributions. Talked about the tax benefits, how powerful they are. Again, consult with your accountant about how powerful those tax benefits are. And passive wealth building. So you're getting this residual income, you're chilling at home, you're on vacation, you're enjoying your life, and you're building wealth. And an awesome return on an investment. So when is the right time to invest? Well, the time is now. And so, I don't say that as facetiously. I mean, right now, the interest rates are historic lows. We're getting all these favors from the banks. I mean, interest-free for 5 years in that deal on a $39 million mortgage. So the interest rates are historic lows. Now is an awesome time to buy. We're getting momentum. So 1015 Capital, we're getting all kinds of deal flow. So we're getting brokers bringing us deals, other investors bringing us deals to help raise capital for them. So with our momentum, we're getting a lot of deal flow. We talked about the 400 unit in Waterford Lakes that we didn't get. We're raising capital on a deal in another state right now in Arizona. And so we're in the middle of that. And so we just put an offer on a deal in Tampa. So we were there this weekend, to walk the property, and then we submitted an offer on it. I think that's 90 units there. So we're building momentum. We're building a lot of steam, and we want you guys to come along with us for the ride, and let's build this together. So any questions, please hit me on my Facebook, on my cell, text me, call me. Let's set up a one-on-one. I think here we're gonna kind of be hanging out a little bit, but feel free to please hit me up. Let's talk about it. I'd love to talk about it some more with you guys. We have the feedback document, so please let me know what you guys thought of the presentation, what we can improve on. I want to thank Christian, Tyler, Claudia, Lorena, especially Lupita for putting this on. And so, guys, will you do me a quick favor? Will you stand up, please? Will you stand up? Yeah, let's give yourself a round of applause. Come on, man. Come on. Yeah. Thank you. Thank you.